Hi, I'm Beat Spammer from macrobeat.co.uk. A week of more unfriendly range trading really in FX without really going anywhere. Equities are really sort of on the way back up, but again, there's no real clear story at this point. The discussion around the Fed taper is obviously ongoing, and not as in a taper tantrum, but more in a sort of trying to scan what various Fed officials are saying. Obviously, they start to acknowledge higher inflation. The word transitory is obviously still the main word they are using. I think we start to have maybe a little bit of a different view of what transitory means in terms of a timeline. I think the market starts to sort of smell that, you know, this window of transitory could be a lot longer than the Fed may anticipate right now. As well, the question of where do we actually peak? Yes, there are factors that are pushing inflation higher currently that are clearly transitory. I do agree on that. But where I probably do not agree with, I feel the peak is going to be higher. The drop back after the peak may still leave core CPI quite near 2 or above 2. And I think this is something the Fed may have to address. Personally, I still expect the Fed to probably shift language in summer under Jackson Hole, ready for the September meeting. And I think the market sort of feels that there is possibly a change in the air, even though right now there's no sort of hint of that. But given the way the market moves or the lack thereof, really feels the market is not willing to really push hard on the old themes. That, on the other hand, the one thing that really strikes me still is the Fed policy is still set at the sort of crisis level from March, April of last year. No matter what you feel about the current recovery, we are definitely not at crisis level. So I really do think the Fed, even though I appreciate CPI, I appreciate non-farm payrolls, whatever, but I just think the current Fed policy is just wrong at this point, and I think a shift has to come at some point very soon. On the other side, we only had the RBNZ this week, a little bit more hawkish than expected. The market was looking for the first hike to be second half of 2022. RBNZ told us rate liftoff could be as early as Q2 2022. So we have seen a little bit of flurry in the kiwi, but it hasn't really reached any sort of temperature of what we've seen after the Bank of Canada. I have a few charts for you today. The first one is really just about the core topic out there, inflation. This is the sort of the price index about on US inflation. And we really see this is at the really highs of the last sort of 20 years. So, you know, it's undoubtedly happening, and it just depends on what the view really is of which element is transitory and which is not. On the next chart, this is dollar CNH, probably the biggest story in FX this week. We finally taken out 640, the sort of lows of early in 2021 when the PBOC stopped the appreciation of the CNH. The story right now is China is obviously very concerned about the rallying commodity prices, and so therefore it's maybe an easy sort of guess that they will tolerate a somewhat stronger CNH to offset at least part of it. I don't think everything can be offset, of course. They've been warning last night just not to think of this as a one-way bet, so I think the PBOC will probably manage the rise in the CNH and just sort of smooth it out and not to get a sort of move that we have seen in the second part of 2020. On the next slide, we have dollar yen. So the sort of yen weakness continues. We have seen some rebalancing of the MSCI index last night, which pushed that trade a little bit further. But I think dollar yen is on the way to continue higher. Euro dollar failed the breakout. We had a sort of push high in euro when dollar CNH broke the 640 level. But already it feels that we sort of running out of steam, and with a risk once we take out 121.5 that the euro actually starts turning back down again. Personally, I think all these emerging market bullishness that we see out there, maybe it's time to think again about using long EM as a funding in euro. So in other words, selling euro here rather than against a dollar, especially if we do think there could be some change of Fed language later or mid-year. Here, the next one, we have gold. We see that the sort of inflation theme might actually really start to get hold again in gold. This sort of recent breakout is really quite interesting and quite strong, and I think this could really continue into the next few weeks. This is it from me. Thank you very much indeed. Bye-bye.